Big opportunities in life have to be seized. We don't do very many things, but when we get the chance to do something that's right and big, we've got to do it. And even to do it in a small scale is just as big a mistake almost as not doing it at all. I mean, you've really got to grab them when they come, and because you're not going to get 500 great opportunities.
To ordinary people like us, a recession may present a once-in-a-lifetime opportunity. Making the right decisions could put you in a position of prosperity for the rest of your life and provide wealth for your family and future generations. This implies impending financial problems for those who are unprepared. You should try to figure out how to proceed to be in a much better financial position. Make sure to finish the video because a few more minutes of research by yourself could result in a once-in-a-lifetime financial reward. It's reasonable to feel anxious during a recession, and being a little cautious can't hurt. However, you shouldn't let news of a possible financial catastrophe derail your long-term strategy. If you're committed to increasing your wealth, you must be ready for everything. Maintain mental clarity and focus on your long-term objectives when performing the necessary tasks. Keep in mind that accumulating wealth entails the possibility of experiencing sporadic financial difficulties. These situations shouldn't demoralize you, and you shouldn't be shocked by them. Tracking your progress over time on a yearly, quarterly, or even monthly basis is one option. There are times when it seems impossible to progress. Look back at your numbers to see how you've improved. For example, paying off debt is like receiving a reward. Let's say you have $1,200 to invest in the stock market or use to pay off a credit card debt with an 18% interest rate. You will save 18% if you apply that money to the debt on your credit card. Accordingly, it equates to an 18% return on your investment. As an alternative, investing that money in the stock market could result in either gains or losses. One thing to think about is a guaranteed profit or a guaranteed savings in this case.
If you're buying a farm, it's true if you're buying an apartment house, any financial asset, oil in the ground, you're laying out cash now to get more cash back later on. And the question is how much are you going to get, when are you going to get it, and how sure are you?
And I said, well, what do you owe on your credit card? And she said, well, I owe X. And I said, well, what you should do, I don't know what interest rate she was paying, but I think, I think I asked her and she knew, and it was something like 18% or something. I said, I don't know how to make 18%. I mean, if I owed any money at 18%, the first thing I do with any money I had would be to pay it off. It's going to be way better than any investment idea I've got.
What can you do right now to get the extra cash when opportunity arises? Extra cash will act as a cushion if you encounter a catastrophic problem in addition to being available for investments. As the saying goes, there is no shortage of opportunities in the stock market, what is lacking is money. In addition to having a normal 4 to 6 months emergency fund, do you own any talents or skills that you could use to generate a little more income in your spare time? You'll never regret having a larger than average savings account during difficult times. Saving money includes avoiding major purchases or at the very least delaying them until after the dust has cleared and the future appears more optimistic. While markets are falling, interest rates are rising, and layoffs are reported, major financial decisions should not be made right now. If you don't have to, why extra expenses? The timing is not ideal. Wait until it is absolutely necessary before making any large, unnecessary purchases. Remember that anything you can save right now might generate considerable returns in the future. All boats rise with the tide, so when the economy is expanding, investments, regardless of their quality, generally perform well. The market is moving up. Even inexperienced stock pickers frequently make winning selections, and nearly everyone loves to brag about their investments. Only those who make long-term investments in high-quality assets will continue to profit.
If you own the best auto dealership in town, the best brand, and had somebody good running it, you wouldn't drop by every day and say, how many people have come in today, or, I think interest rates are going up a little, slow down our sales or anything. No, you buy it knowing there's 365 days a year, and you're going to own it for 20 years, so that's 7,300 days, and things are going to be different from day to day and year to year. You shouldn't buy it if the day-to-day stuff is important.
Examine your retirement accounts and other investment accounts, and pay close attention to what you are investing in. Which stocks or funds in particular do you plan to continue contributing to, while the others are wondering where things went wrong? You'd be shocked to learn how many people routinely contribute to the accounts without understanding what they're truly investing in. Stocks of good companies frequently trade at a discount during recessions because the market will value them negatively because of the anxiety and panic. Investors sometimes withdraw money from the market due to their fear of what may happen in the future, which causes prices to decline. To long-term investors who are ready to benefit from these significant reductions, this is the incredible opportunity.
I will always react well to declining prices. If I like to buy a business, if I could buy this hotel we're in and they drop the price, is that good news or bad news for me? I mean, if I like to buy hotels. So, but the fundamental point, and some people get it and some don't, but when you are buying a stock, you're not buying something that wiggles around or is on a chart or has a target price. You're buying part of a business. If you're right about the business, you don't pay a crazy price. You can be right about the stock as long as you don't do dumb things yourself. When people are fearful, it's instantaneous transmission to everyone else. I went to a party actually of a wealthy friend of mine sometime in September, and all of a sudden 50 people there, who owned their homes outright and everything, but had a little money. All of a sudden, every single one of them, that's all they wanted to talk about, because when people are afraid, they are afraid. Confidence comes back one at a time, but fear is instantaneous. We spent a big percentage of our net worth at a very dumb time. and I shouldn't say we, it's I. We spent it in the last few weeks. There were a period of 3 or 4 weeks between Wrigley and Goldman Sachs and General, at a terrible time, as it turned out. I mean, I didn't know whether it was going to be a good time or a bad time, but it was a really dumb time. We haven't ever timed anything. We've never figured out insights into the economy.
It is unrealistic to expect to time the market correctly. Using available cash when stocks and funds have had significant price declines is a terrific approach to increase your returns potentially. When stock prices fall, you might want to avoid buying the shares of a certain company to lessen your risk of losing money. It is better to invest in high-quality index funds through ETFs, which are more likely to recover at a lower risk than individual shares. Even a fund, like the S&P 500, may be purchased for a sizable discount. And a fund like this comes in a lot of different forms. You can select an S&P 500 Growth Fund, S&P 500 Dividend Fund, or an S&P 500 Value Fund, among many more options. No need to investigate high-risk options with your retirement savings because the potential reward from those S&P funds is enormous. The value of having a lot of cash on hand is understood by the wealthy. As a result, they can take advantage of these tremendous market possibilities, which is one of the reasons why the wealthy continue to accumulate wealth. Being prepared to seize these amazing opportunities will greatly increase your income, but don't anticipate getting back that money anytime soon. Be prepared to wait 3 to 4 years for the market to recover at least. You don't have to make a decision about when to invest more money. All you have to do is to continue contributing regularly while keeping costs reasonable. Dollar cost averaging is a mindless, hands-off strategy that alleviates the impact by keeping costs low. Investing regularly protects investors against potentially disastrous investments while enabling you to benefit from those discounted costs without being overwhelmed by market volatility.
When you learn as an investor over multiple decades is the only thing that matters is free cash flow. That's it. There is no other reason to own a stock. And with that philosophy, it brings you into a place where you focus on a company's ability to generate incremental cash flow, because just owning a dividend-paying stock is not good enough. Because, let's say we find a stock today that's paying a 3% dividend yield, and tomorrow, because its forecast for sales get cut in half, the stock drops by 50%. Now it's yielding 6%. I don't want to own that stock either.
Consider sector rotation, which is the process of moving money from one sector of the stock market to another. In a recession, you might want to invest in sectors such as consumer staples and utilities, which are considered defensive sectors with good cash flow.
We try to find businesses that are incredibly resilient, and we call it sort of super durable growth companies, businesses that regardless of what's going on in the world, people are going to listen to more music next year on more devices, with more apps on TikTok or otherwise, and that's why we like owning Universal Music, which is a royalty on people listening to music. We think people are going to be continuing to renovate their homes, which is why we like an interest rate environment where you can't move, because moving means you got to give up your 3% mortgage to get a 7% mortgage. We think people want to upgrade, are going to upgrade their own homes. They're going to be going to the Home Depots and Lowe's of the world. So we try to find these super resilient businesses.
Utility stock investing is nearly risk-free. Utilities won't generate big profits in the industry area. However, they have the benefit of being defensive. With our reliance on technology and the internet to manage our companies from a distance, there will always be a power demand. In North America, millions of people are approaching or are already in their later years. The need for healthcare and caregiver services is expected to skyrocket. Senior living and health services will continue to develop and flourish, making now an excellent moment to recognize and invest in. Only if you've planned ahead will a recession present an opportunity for you and your family to accumulate wealth over the long term. When these possibilities arise, you must be prepared to seize them. They are rare and don't last very long. So it is important to plan ahead. Making the proper decisions in these unpredictable and difficult times could pay off for you in the long run. We appreciate your watching. Please hit the like button below if this video helped you in any way, and don't forget to subscribe to the channel. Thanks again and see you next time.